The macro is bloody awful. It's the largest, most concentrated tightening of rates that I think we've seen almost in history. We have the largest tightening of financial conditions on a broad measure, as opposed to, a lot of people use the Goldman measure. That's not that broad because it uses equity markets, and it's a weird kind of feedback loop between equities and that. But what I did was use the rate of change of rates, the rate of change of the dollar, and the rate of change of commodity prices, and it gives you a understanding of how tight money is. The other way you can look at it is the number of central banks as a percentage of total central banks raising rates. Those kind of things give us a growth shock that is ahead, that we're starting to see, that is quite sharp and severe. So we're talking about something where GDP growth falls 3% or so. So a really decent sized recession. But it looks like my forward-looking indicators suggest that the bottom of this growth shock comes actually pretty soon, like March 2023. And so if the bottom comes, then you get the recovery side. So, to David Rosenberg's point, it ends up being about 18 months or 2 years, because we probably started some sort of recession at the beginning of this year. So the macro is bad now and is going to get worse. The narrative you will see is, well, the macro is about to get terrible, all assets must fall. But once you start doing things like doing the year-on-year rate of change of the S&P or the NASDAQ, they're actually pricing in an ISM, the Institute of Supply Managers survey, of about 40. So that's pretty severe recession as it is. Could they price in a bit further? Could it be at one lower stab? Sure. But these are forward-looking assets. And what they look for is the turn. Why the turn? Because that's somewhere in the next 6 months, the central banks will most likely go, okay, unemployment's coming up, inflation's coming down. We have to look after, our mandates are unemployment and inflation. Inflation is going to be maybe stickier or higher. I don't believe it will be. I think it actually goes negative. But unemployment's going to be coming up. We need to at least stop. So if the rate of change stops, right, you've stopped the pressure on markets. Now, it doesn't mean they explode higher. It's not 2021 all over again. But if the pressure stops because the rate change, because QT stops and they stop raising rates because they want to see how bad this is. Okay, so the probabilities then come of rate cuts, or if not, at least it's going to be stability. They're unlikely to raise rates higher. Okay, so that's generally good for risk assets because they're forward looking. So that's where it comes into crypto. So crypto is really interesting. Same with technology stocks, is they are in an exponential logarithmic uptrend because they are network adoption models. So in technology stocks, we've got the relentless, ongoing, ridiculous pace of rise of AI, robotics, EV, space, Internet of Things, 5G, 6G. Genetic sciences, all of these things are all coming together at the same time. It's the fastest pace of change humanity will ever go through. It's hard enough for us to deal with on societal level, but that's not stopping. Part of that is blockchain technology, digital assets. They're in the same exponential trend, but maybe even faster.
When it comes to Bitcoin price prediction, the biggest question which everyone seems to be asking is, can Bitcoin hit $1 million in 2025 or 2028 or ever? Can Bitcoin ever reach $1 million? And a few months before or a couple of years before, it seems highly unlikely. But now that Bitcoin is at $70,000, all it needs to do is another 10x, and then you're looking at a price point of $700,000 for Bitcoin. And especially the year 2024 started with significant momentum for cryptocurrencies like Bitcoin and Ethereum, eliciting enthusiasm among, the crypto buyers. And as of the end of March, Bitcoin was trading at around $70,000, boasting a market capitalization of $1.35 trillion and also representing a 5% increase of the past couple of days. Bitcoin, the leading cryptocurrency, has faced a tough 12 months of time, shedding approximately 65% of its market value over the past year. And even the people who are very enthusiastic on crypto were taken aback by unforeseen events such as the Terra Luna crash, FTX decline, macroeconomic factors, and Binance's legal issue. And nonetheless, the crypto market exhibited a remarkable recovery towards the end of the year, with Bitcoin showing promising growth. And Bitcoin surged to impressive heights, reaching a price point of $72,000 in March of 2024. And Bitcoin once again did very well in the past 1 week by going up by more than 5%. And this surge propelled its market capitalization to 1.45 trillion, contributing to the overall crypto market's capitalization of 2.7 trillion, reflecting exceptional performance. And now when it comes to Bitcoin's recovery journey, after surpassing the psychological threshold of $31,000 mark, Bitcoin started exhibiting a bearish trend and traded below $30,000 levels for most of last year. And however, it has shown remarkable recovery in the latter months of the year. The world's largest cryptocurrency, Bitcoin, which is on a recovery path, has increased around 207% in 1 year.
Because crypto, with 300 million users, is the fastest adoption of any technology the world has ever seen, twice the speed of the internet. So what you're thinking, so if you can visualize, is you've basically got this massive uptrend that is exponential in nature, but when you put it on a log trend, it's quite nice and smooth. But you've got these big swings. Those big swings are driven by the macro. So what we've done is we're at the bottom of the macro cycle. The beach ball is now being held underwater. But don't forget, every day there's new people building in the ecosystem, there's new adoption. People like Ticketmaster have issued 10 million NFTs without anybody realizing. The scale of what is happening is ridiculous. So the beach ball is held underwater. The moment quantitative tightening or rate rises stop, the beach ball rises above the water. You can't hold it down. And so that is why I am incredibly interested at this moment in time, right here, right now, because I think we're getting very close to the point where growth implodes. We've already seen 2 quarters of negative GDP in the US. We've already seen housing rollover. We've already seen supply chain issues ease. We've already seen most commodity prices fall 50%. We've already seen the dollar explode higher. The dollar's hugely deflationary because the largest exporting nations in the world, Japan, Germany, China, have all seen their currencies decline massively. So they're now selling finished goods at much lower prices. So the macro turn is very close. When we look at on-chain analytics, we start to see things that only ever happen in these massive bear market sell-offs, the 2014 sell-off, the 2017 sell-off, stuff like that. We also are at the bottom of the logarithmic trend channel, 2 standard deviations oversold. That's usually a good one. We're at the 5-year exponential moving average. That level has proven to be about the best risk reward you can ever find. Things like, if we use technical analysis, things like the RSI are as oversold as they have been at the bottom of every other cycle. So we've got this massively oversold crypto market at the time where the macro narrative is at peak. Everyone's like, inflation is going to be 20% forever, and Europeans are going to be dying in the streets because there's no food, and they're going to, they can't afford to heat their houses, right? That's the narrative right now. Okay, so how much worse can this be? And any rate of change means that the risk reward of digital assets from here, normally when you get to this confluence of events, the risk reward is somewhere between 20 to 50x. Now, it depends where you are on the risk curve, which is going to ask the second part of your question, Mark. So Bitcoin is the least attractive asset because it has least attractive of the major assets because it has more stability, further network effects. Therefore, as you get further network effects, your growth comes down over time. So, where would Bitcoin go in the next cycle? Who knows? But let's say 200,000. But then we look at the network adoption effects in Ethereum. How many people are building on the Ethereum network? The ability to now get yield on the network. What's that going to mean for DeFi? Who's going to build DeFi on top of this new kind of benchmark yield rate that's coming out of this? All of the people who are building NFTs, all of the stuff going on. Okay, that's mainly happening on Ethereum right now. Great. Ethereum's slow and Ethereum's expensive. So the market will seek the path of which they can get more stuff done at a faster pace, and they will make trade-offs. Trade-off is decentralization versus speed and cost. I just look at these and say, okay, what we're going to see is the market, probably Bitcoin underperforms, Ethereum next, whichever one of these, and I don't know which ones, will do pretty well. And then there'll be new tokens of which we don't really know yet coming in that solve more problems, where you'll see the 1000x upsides that we've seen in past cycles.
And cryptocurrency experts believe that if Bitcoin maintained its price level of $30,000, it could likely bounce back from there. And looking at the current scenario, Bitcoin has surpassed its all-time high this month, but it has also gone down for a week, and then again it is back up at $71,000. And while the future of Bitcoin is still relatively unknown, retail investors are required to be very cautious about each and every move of Bitcoin, as it has witnessed a lot of fluctuations before. And another reason why Bitcoin went up so much recently was the spot Bitcoin ETF. After the spot Bitcoin ETFs have been a tremendous factor in the growth of Bitcoin, and after the SEC approved the ETFs in the US, retail investors showed a great deal of interest, leading to Bitcoin surpassing its all-time high. And one of the other reasons why crypto experts are hopeful about Bitcoin is that this year in 2024 will be a year for Bitcoin's halving event. The Bitcoin halving event happens every 4 years, in which the Bitcoin reward to its miners is cut by 50%, and this halving event is usually viewed as a positive for Bitcoin's price, as it helps in contracting supply. And historically, halving has been seen as a great sign for bringing momentum to Bitcoin's price. And if you look at Bitcoin's past halving history, in 2021, the price of Bitcoin on halving day was $12, and 150 days after that, the price of Bitcoin went up till $127, which means it's almost 10x. And in 2016, the price of Bitcoin on halving day was $650, and 150 days later, it went up to $800 almost. And in 2020, the price of Bitcoin on its halving day was $8,800, and 150 days later, it went up till $11,000. So yeah, historically, Bitcoin price has always done well after the halving event. So yeah, it might be a decent idea to buy Bitcoin before the halving event, but we should always remember that history is only a guide. It cannot tell you what's going to happen in future. But everyone makes predictions based on the past. So yeah, this could be a decent indication. And moreover, the Bitcoin whales, referring to large investors, have started accumulating Bitcoin once again. According to the data from the on-chain aggregation, these large Bitcoin whales, holding a range from 1,000 to 10,000 Bitcoins in their wallets, indicate that investors have been filling up their wallets with a substantial amount of Bitcoins, and this accumulation may contribute to boosting the price of Bitcoin. So what do you think, guys? Can Bitcoin reach $100,000 by 2024? The current year is the year of Bitcoin's fourth halving. It is expected to occur in the month of April, and it forms the basis of Bitcoin's monetary policy and supports its increasing scarcity by cutting Bitcoin supply growth rate in half approximately every 4 years. And at one point, the supply growth rate of Bitcoin exceeded 10%. It has been cut to about 1.75%, and the Bitcoin enthusiasts often make overly optimistic and sometimes unrealistic predictions for their favorite cryptocurrency, which is Bitcoin. You cannot argue with that, because Bitcoin has also grown up tremendously over the past few years by making impossible seem very easy. And after this mini bull run, there are numerous discussions happening around Bitcoin, which is the world's largest digital coin. Some speculate that the crypto coin could even reach a price point of $1 million by 2025, and it's not just some random guy making these predictions. It is some of the well-known personalities in the crypto world. And recently, Standard Chartered, which is one of the leading British multinational banks, raised its price prediction for the Bitcoin, ranging from 1 million to 1.2 million by the end of the year 2024. In one of its most recent research report citing more profit to Bitcoin miners. And the MNC Bank forecasts Bitcoin to reach $50,000 by the end of this current year.